Hello everyone, and welcome back to the channel. Today, we're diving deep into a topic that's on every smart investor's mind: long-term growth. The market is always changing, but with a solid strategy, you can position yourself for success years down the line. We're going to be looking ahead to 2026 and beyond, identifying some of the most promising stocks poised for significant long-term growth. This isn't about quick flips, it's about building lasting wealth. We'll break down our discussion into a few key areas. First, we'll look at some top-tier companies that have consistently shown strong growth potential. Then, we'll get into the exciting world of high-growth tech and innovation stocks, the potential game-changers of tomorrow. After that, we'll balance things out by discussing stability, diversification, and some defensive growth picks that can help protect your portfolio during uncertain times. Finally, I'll share some of my personal thoughts and strategy tips to help you navigate your investment journey. So, grab a notepad, and let's get started on building a forward-looking portfolio for 2026 and beyond. All right, let's jump right into the big players. When we talk about top long-term growth stocks, we're looking for companies with a proven track record, a strong competitive advantage, often called a moat, and a clear vision for the future. These are the giants that continue to innovate and expand their reach. A great example is Microsoft. It's more than just Windows and Office. Their cloud computing segment, Azure, is a massive growth engine, fiercely competing for market leadership. Microsoft is also heavily invested in artificial intelligence, gaming with its Xbox division, and professional networking through LinkedIn. This diversification across multiple high-growth sectors makes it a cornerstone for many long-term portfolios. Its ability to integrate new technologies into its vast ecosystem gives it a powerful advantage for sustained growth well into 2026 and beyond. Another powerhouse to consider is Amazon. While everyone knows them for e-commerce, the real growth story for investors has been Amazon Web Services, or AWS. AWS is the backbone of the internet for countless companies, and this cloud division is incredibly profitable. On top of that, Amazon is a leader in advertising, logistics, and is constantly pushing into new frontiers like healthcare and grocery. Its relentless focus on customer obsession and innovation means it's always looking for the next big thing, making it a compelling long-term hold. We also can't ignore Alphabet, the parent company of Google. Search and advertising remain its cash cow, but the company's Other Bets segment holds incredible potential. Think about Waymo for self-driving cars, Verily for life sciences, and DeepMind for AI research. While these are long-term plays, a breakthrough in any one of them could be massive. Plus, its dominance in digital advertising and the Android operating system provides a stable foundation for these future-focused investments. These companies aren't just resting on their laurels. They're actively building the future, which is exactly what we want in a long-term growth stock. Now for the really exciting part: high-growth tech and innovation stocks. These are the companies that could potentially deliver explosive returns by disrupting industries and creating entirely new markets. They often come with higher risk, but the rewards can be substantial. A name that's always in the conversation is NVIDIA. Once known primarily for gaming graphics cards, NVIDIA has transformed into the undisputed leader in AI chips. Their GPUs are the engine behind the current AI revolution, powering everything from large language models to scientific research. As artificial intelligence becomes more integrated into every aspect of our lives and businesses, the demand for their technology is set to soar. Their position in data centers, autonomous vehicles, and professional visualization software further cements their status as a critical player for the next decade. Let's also talk about the semiconductor industry, specifically a company like ASML. You might not have heard of them, but they are absolutely essential to the entire tech world. ASML builds the highly complex lithography machines that all the major chip makers, like TSMC, Intel, and Samsung, need to produce the most advanced microchips. They have a virtual monopoly on this technology. Without ASML, there are no new iPhones, no advanced AI processors, no next-generation computers. As the world demands smaller, faster, and more powerful chips, ASML's role only becomes more critical, giving it a powerful, long-term growth trajectory. Another area ripe with innovation is cybersecurity. As our world becomes more digital, the need to protect our data has never been greater. A company like CrowdStrike is at the forefront of this trend. They provide cloud-native endpoint security, which essentially means they use AI to protect laptops, servers, and mobile devices from cyber attacks. Their subscription-based model creates recurring revenue, and as cyber threats become more sophisticated, the demand for their best-in-class protection will only grow. This is a secular growth trend that isn't going away anytime soon. These are the kinds of companies that aren't just part of the future, they are actively building it. While high-growth tech is exciting, a well-rounded portfolio needs balance. That's where stability, diversification, and defensive growth picks come in. These are companies that can provide steady growth and are often less volatile during market downturns. They might not have the explosive potential of a young tech stock, but they are the bedrock of a resilient portfolio. A classic example is in the healthcare sector. Think of a company like UnitedHealth Group. As one of the largest and most diversified health insurance and services companies in the world, it benefits from a number of long-term trends. An aging population, rising healthcare spending, and a shift towards value-based care all work in its favor. Its Optum division, which provides pharmacy benefits, data analytics, and healthcare delivery, is a huge driver of growth. Healthcare is non-discretionary, meaning people need it regardless of the economic climate, which gives companies like UnitedHealth a defensive quality. Another area to look for stability is in consumer staples. A company like Costco is a great example. Their business model is brilliant. They make most of their profit from membership fees, allowing them to sell goods at razor-thin margins. This creates incredible customer loyalty. People will always need to buy groceries, household goods, and gas. In tough economic times, Costco's value proposition becomes even more attractive, drawing in more customers. Their steady store expansion and high member retention rate provide a clear path for reliable, long-term growth. Finally, let's consider an industrial giant that's also a play on sustainability, like waste management. It's not the most glamorous business, but it's essential. Waste management is North America's leading provider of waste collection, disposal, and recycling services. This is a business with high barriers to entry and predictable, recurring revenue streams. Moreover, they are increasingly focused on recycling and renewable energy, turning waste into a resource. As the world pushes towards a more circular economy, waste management is perfectly positioned to lead and profit from this trend. These types of stocks provide a foundation of strength, allowing you to sleep better at night while your portfolio continues to grow steadily over time. So, now that we've looked at some specific companies, let's talk about strategy. How do you actually build a portfolio for 2026 and beyond? It's not just about picking a few hot stocks, it's about having a plan. First and foremost, think in decades, not days. The biggest mistake investors make is reacting to short-term market noise. Long-term growth investing is about identifying durable trends and companies with sustainable competitive advantages, and then having the patience to let your thesis play out. Don't panic sell during a market dip. In fact, downturns can be the best opportunities to buy great companies at a discount. Second, diversification is your best friend. Don't put all your eggs in one basket, even if that basket is a fantastic tech stock. A well-diversified portfolio should include a mix of the types of companies we've discussed: the stable giants, the high-growth innovators, and the defensive players. This spreads your risk across different sectors and industries. You might even consider adding a broad market ETF, like one that tracks the S&P 500, as the core of your portfolio for instant diversification. Third, always keep learning. The world is constantly changing, and the winning companies of today might not be the winners of tomorrow. Stay informed about emerging technologies, shifting consumer behaviors, and macroeconomic trends. Read annual reports, listen to earnings calls, and follow trusted financial news sources. The more you understand the businesses you're investing in, the more confident you'll be in your decisions. Finally, a strategy one personally like is dollar-cost averaging. This means investing a fixed amount of money at regular intervals, regardless of what the market is doing. This approach removes emotion from the equation and ensures you're buying more shares when prices are low and fewer when they are high. It's a simple, powerful way to build wealth over the long term. Remember, successful investing is a marathon, not a sprint. A solid strategy is what will get you to the finish line. And there you have it, a look at some of the best stocks for long-term growth as we look ahead to 2026, plus a strategic framework to guide your decisions. We've covered the innovative giants like Microsoft and Amazon, the disruptive tech leaders like NVIDIA and ASML, and the stable, defensive players like UnitedHealth and Costco that provide balance. The key takeaway is that building a successful long-term portfolio requires a blend of high-growth potential and stable, predictable performance. It's about identifying the powerful secular trends that will shape our future, like AI, cloud computing, cybersecurity, and an aging population, and investing in the companies leading the charge. But remember, this is not financial advice. The goal of this video is to educate and provide you with ideas for your own research. Always do your own due diligence before making any investment decisions, and consider your own risk tolerance and financial goals. The best portfolio for you is one that you understand and feel comfortable with. Thank you so much for watching. I hope you found this deep dive helpful. If you got some value from this video, please give it a thumbs up. It really helps the channel. And if you haven't already, make sure to subscribe and hit that notification bell so you don't miss our future content. What stocks are on your long-term watch list? Let me know in the comments below. Thanks again, and happy investing.